Welcome to Commodities, and here we're looking at gold, and we've got our turn obviously here at 1330 area through here. So yeah, we need to count the structure to the downside through to here. So let's do that. Okay, in the slightly bigger picture, we're looking at 5 waves down through to here. And then we're looking at an A and a B and a C through to here for wave 2 at 1310, the 50-60% retracement level of this current move down. So look, a little bit of vibration at this minor trading level here, 1300. This is an important level, as is the 1200 as well, as this is the top of group 1. The market is still overbought at this current price here on the daily, so we can still expect further moves to the downside. So just drilling into this particular structure through here, this is the way that I've counted it from this high here down for 1, an A and a B and a C for 2, and then 5 waves down here for the 3rd wave, a very small 4th wave. I'm a bit sort of concerned about that, but all the same, we can look at this as being wave 5 here. We can see that this is impulsive here in 5 waves, so with a strong 3rd wave in the middle here that you can notice, and then so we'll call that the A wave, the B wave, and the C wave into this 1310 area through here. So in one way or another, we're looking for 3 swings across the 1300, and then finding that as the resistance, and then trading it lower from that point there. I don't know if I've got it on a 5-minute chart. I do indeed. So yeah, look, I did pull it apart, and this is the sort of best count that I can come up with. This is how I've counted it. So down for 1, an A and a B and a C for 2, because there's little 5 waves in here, and yeah, and then down 5 waves down for 1 here, back for 2, then 5 waves in here for the 3rd, the 4th, and then looking at 5 waves here. This is the one I'm a little bit unsure about here, this section here, but it's the best fit so far. 4th and the 5th here, and then it does appear that we do have 5 waves up here for the A wave, so the B wave's intact here now, so we'll see wave C come up through here. The end of the session peters out through here, but it's kind of always good to put a line through here and pick up the actual trend, because you know, the further this moves away from here, then the quicker it will pull back into its line through here. So it's kind of just a bit of a balanced line in a trend. Not that it has to be sort of accurate or anything, but yeah, if it moves away from it, the further it moves away, you know, if it was moving, you know, if it moves up, to do an example here as such, if this market did shoot up through it's just handy instead of using indicators. So if it moved up real quick through here and went like away from this line here, then the further it moves away from this balance line here, then the further it moves up here, then the more it's going to be pulling back into this line here. So it's just a good way of actually just getting some, bit like an overbought, oversold indicator really, once you've got the balance of it and got the hang of it. Okie dokie. So yeah, look, so that's the story there. So we'll probably see silver do much the same thing as well in its little corrective wave here as such, and then move lower into the 1900 here. The copper market has also broken lower, which is in line with its cousin gold, and so we'll just drill into that in a moment. But just in the bigger picture here, while we're here, it would say we could pretty much call wave 4 in here now, but wave 4s can get sort of very complicated. But let's just see how we go. This move down through here at the moment, this low here is roughly the 61.8 retracement level from this move up through here. So we don't actually have a clear 5 waves down. So this could actually be all of an A wave up here and a B wave down to here and then a C wave up here. I don't think that's the case. I think this is what we've been waiting for. And yeah, let's go and have a look. But this move down to 280 would just be the 3rd wave down through to here, and that's our target, the 280 here. In fact, just technically a low below this low here would do the trick, but we'll see the structure as it moves down through there. But in that here yesterday we were calling this in as the high, and we were looking at this being wave 1 and 2. We had those in place, and then we mapped out a bit of a scenario to the downside here. I thought it would have gone a bit slower from here, but the third wave, the third of the third, was quite quick through here. So anyway, we're looking at it like this here, so down for 1, which is this one here, back for 2, which is this one here, and then down for 1, which is in here, back for 2 here, and this is the pattern of it coming down here. So we're looking for the third wave in through here, then the fourth and the fifth for wave 1 here. So once we've got wave 1 in play, then we'll look for a counter trend here to retest this again here, and then further down through here as well. So certainly on its way, and yeah, further to move down through here. The oil market, yes, well, look, as I mentioned before, and as always as well, if the 102, the pivot within group 1, becomes the resistance, then we know that we've got a bear market, a bear trend at least anyway. So this is really nice tested support on 103 now. And the beauty about this too is that from this high here, we've got 3 waves here. That means that high there will be taken out. This pattern here is very similar to this one, which would be similar to this one. These are sharp patterns, so they're different. This one's the same as this one here. So these are all series. That's a fourth wave. That's a fourth wave. This is a fourth wave. These are waves 1s and 2s here. They're different. So it's part of that package. So anyway, look, trade up. We need to be taking that high there, and 105 would be the target area there. The gas market, I'm calling this in. This is a 38.2 retracement level here. Obviously, there's a couple of things here. We were assuming that this, I'll just go back over this, from the bottom here, it can be an A and a B and a C up through here, technically fine, but because the C wave was so long here, it was had the personality of a third wave. And this fourth wave back, pulling back to the fourth wave of 1 lesser degree, is the 38.2 retracement level. And I'm leaving it as a fourth wave, even though this looks impulsive down here because of what oil's doing as well. There's the whole natural gas thing from Russia as well, and that's 53% of Russia's income, and it looks like the Europeans are going to be supplying them gas now rather than the Russians. So make of that of what you will, but in terms of patterns, and that's all that I'm good for, is just figuring out patterns and the price and those sort of things, is that we'll leave this as wave 4 here, and we'll look for further upside here. The soybean market. Okay, the grains. Most of the grains are positive. Corn's a bit slack. Coffee's down. However, this soybeans here, we're just bringing in the alternative count, which I'd been mentioning over the days ahead, and because I was never happy with this particular structure here. But anyway, that's bar the point. I'm calling this wave 1, wave 2, and then 5 waves up here for wave 3. This wave 4 pulling back to wave 4 of 1 lesser degree, and then looking for 5 waves up through here. We can see that we've got the third wave in here now, so we'd be looking for 4 and 5 cutting in into the sort of 520 sort of area as such here. I was just putting that on top there just as a bit of a thing here. But look, anyway, this is how we're counting it so far. So yesterday we were being positive above the 1472. So if you did go long, then you probably would have taken money at the 1500. So you should have. However, it's still got a bit more upside, and the upside would be up for 1, back for 2. And then the best I can count this here is wave 1 with little 5 waves to here, and wave 3 into here, little wave 4 and wave 5 up to here to make wave 3. Then an A and a B and a C, may not go that high, and then up into this area here. So once we've got this 5 waves here, then we'll see a correction at that point. On the 4-hour chart, this will be, well, look, just approaching the old highs here tells you that it's going to be overboard anyway. So, and this is our balance line through here. So if this moves away from here, then it will catch up pretty quickly at this point. Our wheat trade that we entered or looked at entering yesterday has taken off nicely, and it's nice really because it helps us confirm that this wave 2 is in place. And if that's the case, then wave 3 is going to be quite strong, so stronger than, well, let's just go over this here. This is all of wave 1 here, okay, all up through here. So wave 3, when it moves up here, is going to be longer than this wave 1 here. So that's quite a good looking trade. So what we're going to do, you should have, if you're interested in this market, you would have had a position in here yesterday. And look, the move up here is in 3 waves, so it can be corrective. I could have this wrong, and we could have basically an A wave to here, a B wave, and then a C wave down to here, and then up from here. So that's a possibility. So that's the risk. That said, we'd be looking for a nice, solid, grounded support on 700. If we can get that, then we can move further to the upside with a bit more confidence. Now, the move up so far is acting like it should in terms of an impulsive wave rather than a B wave, a corrective wave. So I guess what we're looking for here is 1, 2. I have to double check on that there, but probably the 1, 2, 3, 4, and 5 to here, then an A and a B and a C, and then a 5th wave up here, then coming back into here. So we just, one way or another, we want to see that support up here. The other thing too is that we want to, once we're above 700 there, you need to have an order at 700. You also need to have an order at 710. Preferably support. Definitely 720 is support, definitely 730 is support, and even 40 and 50. We really want to this is the time to really move into this particular trade and load into it. And if we've got it right, then we'll be looking for a really good strong trend to the upside. We'll be trading up to the 800. That's what we'll be gunning for. So pretty exciting. The corn market. Yes, look, it's up, but I'm just a bit reluctant, really. I know the other grains are moving, but I think that in one way or another, we may get trapped in it. We just need a bigger correction here for wave 2. We just don't have it. Maybe we'll never get it, and maybe it'll just keep pushing to the upside. And, while it's above this long-term trend here, maybe that's what we should be doing. At worst, what's going to happen is that, we are positive to the upside. The worst that can happen is come back to 480. I'll give this a little bit more thought. And if we did move forward with it, we would just be buying at every 10 points up here. And even if it came back here, we'd also be buying at every 10 points as well. So be prepared for that, and it would take time, and keep it small until we've got what we needed from it. But it's nice to trade out from a correction, because the correction is the foundation for the next trend. And cascading to the upside is nice if you can get away with it, but it's just a little bit more scary, that's all. The coffee here, where are we? Over here. Now, I just need to explain a couple of options here, because we were looking for this. It would have been nice if this top of this third wave got taken out. That would have been just perfect, because then I know that where we would have been, we would be in wave 5, and then we'd be looking for an A and a B and a C. But it hadn't taken the top out here. So we're stuck with the situation that, this wave 4 would be over here. This would actually be a green wave A, and a green wave B, and a green wave C coming in here with this wave 4 here. So this could be the occurrence here, and then we get up for wave 5 here. So it's a little bit annoying. I'm hoping that we actually get another little high up here. That's what I'd really like. Then we can have this wave 5 in here, and then we can play out our corrective pattern as such here, which is what I really want, because it would just tell us that this whole 5-wave structure up through here is done and dusted here, and then we can look forward to a corrective pattern, and then looking forward to a nice trade, you know, going up from 200 to 300. So there's a ton to be made there, but it's just nice to have the correction looking as it should, so to speak. But as I mentioned, we wouldn't miss a run up if it was just going to run straight up, because we would be long on top of the 2030 support here. So it's not like a big deal. You're not missing anything. Nothing's really happening here. We just need to give it time to unfold a little bit further, and I won't go into a whole lot of detail here, but it's still possible for this to move up to here as a 5th wave to get it. But as it stands, this is an A and a B and a C wave to here, which would make the B wave, and then the C wave would be 5 waves down through to here, but it would only give us wave 4 over here, and I don't know, then we've still got wave 5 to get up there, you know, the first high above the level, so to speak. So a bit annoying, but there you go. The sugar market, we're looking for it to come back into the 1650 and also perhaps even to 1630, and that's still unfolding in the right way. If you're short within this, just either take profit at 1650 or just hang in there short. There can be another low to come in through here as such. And look, I'm not really even bothered about this. We're not shorting it as such here. We're looking for the long trade. We're looking for this move down here to complete itself. This can be counted as you see it, or it also can be counted as this down for 1 and back for 2, but then this down is 1, 2, 3 to here, 4 to here, 5 to here. So a 3rd wave down, a 4th wave, and a 5th wave down to here. So that would be the extension happening here if that was going to be the case. So all I want to see is the market move down below this area here, then find support on the medium level 1650, and then we can start shoveling it in on the long side. The orange juice market, it's nothing really to report here. The correctional phase is still going. This was in 3 waves here, so we nailed it in as wave 4 here. But problem with this is that we've got 3 waves up here, which makes that corrective like a B wave. So that means we'd see a C wave down here, but that's not really the case either, because that's in 3 waves here. So that's corrective. So we should make a high above here. So maybe we've got the 1, 2, 3, 4, and 5 up through here. The main point is we want to get an order in at 165 and preferably support. Another thing too, I probably mentioned this, but I always forget what I say half the time. It doesn't really matter if I say it twice or 3 times. Look, once the market gets into group 2, which is 65, 72 and the 80, then I know it's going to be lifted to the upside. I mean, I know that it's going to be lifted up to the upside anyway once it's got support on the 150 here. Once we know 150, we know we get to 180. That's the place that if it was going to fail, that's where it's going to fail from, the 180. 72 will knock it around a little bit. But the main point here, once it's in group 2, I just feel sort of safer. And I know that in group 2, 65, 72 and 80 can be held in here, because it's normally a series of 4th and 5th waves in here. And we'll be leaving our stops well out of the way. And, we'll just sort of do our best with the wave count, but it will be partly the guessing game in a lot of intraday counts. But the main point is that we continue to buy long. We're long all the way up through here. We need to continue that campaign and, just sort of just hold on. Okay, that's it. Cheers.